So now let's talk about Naspers. And of course, we talk about Naspers often, we hold them locally. It's because they own the core business in China that is the dominant social media player there. And that, of course, is WeChat, part of the Tencent group. It's, of course, got all sorts of other assets. Market capitalization in rands, 1.3 trillion rands. Price earnings ratio, 124. Dividend yield of 0.2%. But the funny thing is that 1.3 trillion rands market cap doesn't even equivalent, that's not the right word, doesn't even equal,
yes.
That's easier, doesn't even equal the implied value of the Tencent stake based on Tencent's Chinese or Hong Kong listing.
Yeah, in fact, it's at a 46% discount this morning.
Mad. Yeah.
So this means that the entire Naspers and everything that you could possibly own within Naspers, that's Tencent, that's the other internet businesses, it's the food business, the food delivery service in Germany, the new one. It's all their online platforms, all the OLXs, the entire multi-choice is worth zero, and their Tencent stake is at a 50% discount.
So it's gotten to the point where you can almost begin to understand the frustration of the Naspers shareholders, because if you were just to add up those bits and pieces and come to a sum of the parts type valuation, this thing should be trading well above, you know, 3,500, 4,000 rands a share, not so?
Yeah, and I reckon, I mean,
At
eventually, as these the internet businesses and the e-commerce businesses mature, the expectation is that Naspers will be able to sell a lot of them off to guys like Amazon and the rest, and through that realize value for investors, and we'll probably see that value unlock come through. I think investors are a little bit impatient at the moment, and I also think they're a little bit unfair because honestly, it's not management's problem that the market's undervaluing the share.
It is a tricky
one.
The
market's problem,
because they go to the annual general meeting and they give Koos Becker and Bob van Dijk a hard time, like they're doing something wrong. But it's their brethren, in other words, just what you're saying, that are the ones that are not valuing it right.
Exactly. And
however, do you think, as you sit there, that they should do something? And what would that something be? Because people say, well, why not unbundle it? The problem with that is you cannot imagine that the Chinese authorities would be all that excited if there were to be a whole bunch of funny shareholders. They like the South African link.
And I mean, not just only that, but why would Naspers unbundle something that they think still has a lot of value for Naspers? I mean, that makes no sense. You unbundle something if you don't like it. So Naspers is unbundling Novus. That makes sense. It's a printing business. Why would they unbundle Tencent where they still see a hell of a lot of growth?
Let's look at the share chart, because it has crested 3,000 rands a share. It's currently sitting just a little bit below that, but it still looks fantastic.
Yeah, I mean, a discount to that Tencent value of 46%, which means the rest is worth is priced at zero, and we don't think it is worth zero, and we still see upside in Tencent.
Well, about that, so Tencent, obviously WeChat has lots of things going on. It's a kind of combination of social media platform, but it also has a payment universe inside. There's a lot of gaming which happens. Chinese people, 1.3 billion of them, all cell phone obsessed, and they can do all sorts of commercial things, buy things, send money, all that inside the WeChat platform. So in some senses, WeChat is a further developed and more powerful and stronger player even than the equivalent Facebook and Twitter and all the other things that it emulates.
Yeah, I mean, if you can think of, if you take Zappo, Facebook, Snapchat, Twitter, and
Candy Crush, all the other games that you
everything else, and you put that together, and you put Uber in there, and everything that you can possibly think of. That is basically WeChat, and WeChat is clean and crisp. It's not even a messy kind of app. I don't know if you've spent some time on it, but it's actually quite easy to use.
Provided you can read Chinese. Or are you talking about the English language version?
The English language version. I mean, I used it to vote on the Voice essay. I was quite keen there, and I think MultiChoice trying to push WeChat in South Africa a little bit, not really taking off.
But the app itself, you're saying, was great and user friendly.
Yes, absolutely. And I mean, I picked up a stat while I was preparing for the show that 52% of Chinese individuals' internet usage time, so on average 52%, is just using Tencent product. So
that's it.
It's gaming, it's WeChat, and it's everything else related to it.
In case you thought gaming wasn't really a good business case, what happens there is people pay for the games, or they pay for avatar upgrades, or they pay to be able to use micro improvements in the games, like to respawn quicker and stuff like that.
Yes.
Very, very popular, massively profitable, and a bulk of little small payments amounting to a river.
And what I really like about the gaming business is that it's actually exportable. So social media gets very sticky in a certain country. So, for example, in South Africa, we do WhatsApp. We don't do WeChat. In China, it's WeChat. I think in India, it's WeChat. It depends where you are.
Yes, where everybody is. Yeah.
Gaming is exportable because if the game's good, you're going to play it. I mean, the entire world's playing Candy Crush and Boom Beach. It's exportable.
And they bought Supercell, which meant that they have all of those games developed in that environment as well. So they have the biggest games, Honor of Kings and all those kind of things, but then they also roll in new ones as well. So it's going. I tell you people, this is a must-have.
And diversifying their revenue stream.
It's understandable that there would be a bit of a discount because who would want to get into Tencent via something listed in South Africa? What's that about? But as it happens, I think people just need to be patient. Definitely hot, definitely deserves its place as a dominant position in most clients' portfolios.
Yeah, I mean, absolutely. The unfortunate thing just is that Naspers makes up 17% of the JSE, and most clients don't want more than 10% in their portfolios. And that's the only unfortunate thing about Naspers. The rest is just
But I think people should face that down and increase the amount of exposure in their portfolios. We certainly have that in our hot stocks portfolio. Okay, good. So we're both smoking hot on Naspers as well.